Hello everyone, today we'll be talking about our weekly analysis. Let's dive in. This week, the dollar saw a notable rebound after a persistent level of inflation was revealed by both the CPI and PPI inflation data. This development also gave the Treasury yield a nudge over, helping them recover from their recent dip. All the eyes are now on the upcoming FOMC meeting with the dot plot on Chair Powell's speech on the agenda. A more aggressive tone is highly anticipated. The Fed's caution approach to the next rate cut is clear, with the market being on a 60% chance of a cut come in June. Over in Europe, the euro took a hit. The ECB has officially signed a potential rate cut by June. It may be even as early as April, as inflation trends closer to the target, which is showing signs of disinflation. Meanwhile, in the British pound has had its share of ups and downs this week, but mostly downs, despite the UK showing modest economic growth of 0.2%. In January, weak employment data for the 3 months ending in January weighted heavy and pushing the market toward expecting a rate cut in August. The yen has some news as well. Ringo announced a wage agreement at 5.28%, making the largest increase in the last 30 years. This set the stage for the Bank of Japan's policy meeting this week, with the marked anticipation kept a possible shift in monetary policy. Gold, after 3 weeks of gains, faced a downturn following the US inflation data release. On the other side, oil showed positive weekly gains. This optimism is backed by energy agencies revising their market forecast upwards, thanks to the OPEC Plus extend output cuts it's hitting in robust demand and supply deficit in the second quarter. And let's not forget Bitcoin continuing its bullish streak and hitting new historical levels. However, it took a slight step back on the last day on the week, correcting itself after the impressive rally. Looking ahead, central banks meeting in Australia, Japan, the USA, and the UK are going to be the main attraction. Expect some serious market volatility as we inch closer to the potentially entering a new cycle of rate cuts. Moreover, PME data from the UAE, US, Australia and Japan, along with the inflation figures from the UK, will be keenly watched. That was all in our weekly analysis. Please follow us on our social media to keep up with the latest news. See you.